Everyone is asking me what's going to happen next year. What's the prediction?
The prediction that for 2025 is looking pretty rosy. Buyers' confidence, affordability, supply, demand. They're the three big drivers of the property market.
More than 400 suburbs around Australia are now in the $1 million club.
While interest rates are going up, it's nearly like a perfect storm. Right now is the time to invest. Melbourne's strong, Brisbane is hot, and Perth has still got some specific areas that are really good to invest in. Did I do anything last year? And if the answer is no, then you need to put your finger out and actually do something.
G'day Cam, welcome back to Brick to the Future.
Pumped, good to see you.
Yep, final one for the year.
It is, rolling into Christmas, and Christmas is always a time where people start to reflect on what they need to do for themselves, the old New Year's resolution financially.
I've been at lunches and dinners nearly every day for the last couple of weeks.
And that'd be hurting, mate.
Hurts a lot, my liver's shot. And everyone is asking me, what's going to happen next year? What's the prediction?
Yeah,
what's happening in the property market?
No, that's all right. We'll dive into it. Welcome everyone to Brick to the Future today. We're going to do a deep dive into trends, strategies, insights into 2025. You've been watching the property market for a while now, and you know things are shifting. I think some of the key themes I want to go over today in today's episode, we're going to go through buyers' confidence, affordability, supply, demand. They're the three big drivers of the property market, but a few federal levers. We'll talk about how they're affecting things, and then we've got some listener questions. How's that?
We have. It's going to be a good episode. Looking forward to it.
Nice. All right. Well, so you've been out lunching, boozing on, maybe. Probably more boozing than is there any structural integrity to these lunches, or you just roll in and pour yourself out of there?
Man of the people, Cam. So yeah. I'm just out, promoting myself around the people there. But everyone is asking, and probably unanimously every one of them, there's talk about what's next year look like.
Yeah.
And interestingly, yesterday people were saying, oh, well, the start of 2024, everyone was saying the property market will be different. It's going to be big changes from 2023.
Yeah.
And I feel like we've gone through the year and not a lot's really changed, and probably that might be related to interest rates, and that's one of the levers I guess we'll talk about.
Yeah.
But there's many other factors that drive the market, and I think some of those are really positive going into next year.
Yeah, I think one thing we've been really conscious of in the last 25 years and the last decade of doing these podcasts, and especially at times during the, I don't want to say it and keep falling back on the COVID thing, but we talk about
the new normal.
Yeah, the new normal. But talking about what our predictions are at the start of a year, and then reflecting back on those and how accurate we were. And we get it pretty right most of the time, which is a good thing. And that doesn't come down to us gathering information from lunches. It's from an analytics and data scientist team.
More than 400 suburbs around Australia are now in the $1 million club. Yeah, meaning the median house price in those suburbs, $1 million. So,
yeah, and that's happening in the last few years while interest rates are going up.
Correct.
Yeah, all right.
So let's unpack the thing you just said. Population growth, massive housing shortage, and supply and demand is going to push pricing up.
Correct.
Not all suburbs and areas and regions are created equal.
No, that's
Some will outperform.
Yep.
And you've got to be pretty careful where you're going and where you're looking.
100% right. So we've talked about supply and demand, the basic fundamentals. The other big thing that affects house pricing is affordability. Now, the biggest impact currently to affordability, inflation's starting to get under control, but is interest rates. Obviously, that's on the front of everyone's mind. But if we do a basic calculation, now this is an easy way to work it out. Now, you've said that 400 suburbs, while interest rates have been going up over the last couple of years dramatically, the housing prices, there's another 400 suburbs that have joined the $1 million club. So prices have continued to push up while interest rates are going up. Yeah. This is one thing I want people to take note of as they start to see interest rates come down, because every 1% drop in interest rates, the average property price increases about 10%. So if you've got $1 million house, interest rates drop by 1%, you're making another $100,000 on that. So we're at this tipping point with the property market, with the economy, and this is where people always say, why does the economy affect property prices? Because of the affordability factor. So it's nearly like a perfect storm. We've got really low vacancy rates. We know rent prices are pushing up. We're not building enough homes. We've got immigration coming in, and we've got interest rates about to come down. So the prediction that for 2025 is looking pretty rosy.
I was talking to Simon 2 weeks ago, and he said to me, I had a borrowing capacity of $1 million.
This is a medial, is it?
Yep.
Yeah.
I had a borrowing capacity of $1 million. And once the rates went from where they were to where they are now, so this is COVID rates, which historically never go back to type low rates.
Yeah.
I'm down $300,000 on what I can borrow.
Yeah.
That's a good example of what happens to the property prices and people in the market looking at those properties.
Yeah. What I think the other main thing that actually pushes up pricing. Now, this will happen across different capital cities. So if we start talking about the individual capital cities, is buyers' sentiment. So the government do polls on buyers' sentiment. If we're looking into 2025, buyers seeing it's the first time where they've started to see across the board, in a positive manner, the long-term growth potential of property. So when that wave of buyers' sentiment comes back in, that starts to drive the property price, as you see, and that's the switch in the media from properties doom and gloom to properties boom.
Yeah, I saw that. I think people's long-term view on property is finally turning positive. Like there'll be growth in the near future versus the sky's falling down.
Yeah. So let's talk about a couple of capital cities. So we know we always use, and this is our analytics team, use Sydney as a lead market indicator. So the main drivers of the property market, if we look at Melbourne and Sydney, drive off similar economic bases. They're both, business is what drives the economy in Melbourne and Sydney. Sydney's a stronger business economy currently. So it usually goes first as far as its growth. Now, I'm not sure if you remember the stat off the top of your head, the exact...
The medians?
The time frame, I think, there's been a difference between the medians. What year was it? So this is the greatest difference between Melbourne median house price and Sydney median house price. I remember it, and I just want to see if you remember it.
All right.
What year is it?
I think it's 82.
I've got 87 in my head, but it's...
So the stat is that...
Thanks, Siri.
The stat, as I understand it, is that historically Melbourne sits at 80% of Sydney's median.
Yeah.
That's where we should sit price-wise.
Yeah.
We're currently at 53%.
Yeah.
And the last time we were this low was, needed fact-checked.
It is. I've just checked 82. It's just checked. It's 1987. So anyway, we're pretty close. But what does that tell us? It tells us we've got a major discrepancy between the median house price between those big capital city drivers. We'll come back to that, but I want to talk about Brisbane and Perth quickly. So Perth, we were very hesitant pre-COVID putting people into Perth. There was a long time where our clients who had diversified portfolios across the other capital cities and were asking us when Perth's right to go, and we held off for probably about 5 years. Remember, in every one of our 6 monthly client nights, when we go through Perth and we'd be showing the vacancy rates was sort of like the indicator we were looking at. We held off. Started COVID, we opened the floodgates for Perth investors, and the investors there, while some of the building construction times took longer than expected, that also meant that there was huge capital growth and huge rental increases. We're seeing rents coming in $250 above what we anticipated the rents for our clients when we did the property investment analysis for the clients, and $100,000 to $200,000 more in growth than we anticipated. Perth's still got some legs in it. So if we look at the next year or so, there's specific pockets of Perth that have still got a massive undersupply of housing with the infrastructure that's going in. But talk me through Brisbane, and you're pretty in touch with the Brisbane market. You spent a fair bit of time up there. I love Brizzy. We've both got a lot of properties in Brisbane.
Yeah, the Brisbane market sentiment's really strong. You got investor activity really strong in Brisbane, and you got owner occupiers really strong in Brisbane. What I heard yesterday, which probably really highlights for me just how strong the market there is. A project launched, they had 6,000 inquiries on a weekend, booked 600 appointments that weekend, and sold a project out in a weekend at record price.
Yeah.
So that tells me the market's red hot.
Yeah, I'm excited about Melbourne and the prospects over the next 12 to 24 months in Melbourne. There's been a lot of talk about negativity about Melbourne in the media about land tax and things like that. I think the media is fantastic at focusing on one specific whinge point. That's a good term, a whinge point.
A whinge point.
Yeah.
So I used the stat we just used earlier on the medians, being Melbourne, should be 80% of Sydney's median, currently 53.
Yeah.
And people said to me, well, there's land tax implications in Melbourne, so surely that's holding people off.
Yeah.
Potentially, but that's craziness, because to me, you go, well, it might cost me $4,000 more to hold the property.
Yeah.
But I'm going to make $200,000 in growth. So it's like biting your nose off to spite your face. So consumer sentiment's a real driver of markets, and obviously Melbourne with regard to land tax and extra cost for holding properties. But in the latest Westpac market sentiment report, consumer sentiment for property as the highest point has been in the last 3 years.
Yeah.
So what that tells me is, even when consumer sentiment's good,
So what you're saying is, while sentiment is as strong as it's been, we're still not seeing quite yet the Melbourne house pricing shift. We know there's a massive undersupply of housing because rents are pushing up through Melbourne, but we haven't seen that price growth as yet, and that's just because the sentiment's not there. So the second we start to see, there's two things. When we start to see interest rates just topple a little bit. Now, all three of the four major banks are saying, I think it was March, and I think it was NAB was saying May. But so they're saying that's when we'll start to see the drop. That kicks sentiment into gear really quickly. The other big factor is, which this is what I want to talk about, bring back what we're talking about, Sydney and Perth and Brisbane, is that what we see over these times, we've got three huge markets over there that have all had pricing growth. Now, what happens when investors have pricing growth in other capital cities and they start to see that pricing growth peter out, they then take their equity out and they focus on a capital city that is due for growth. So we've got a perfect storm coming for Melbourne, where you've got three major capital cities that have all had strong pricing growth. The smart investors in those capital cities will then take their equity out, bring it back and drop it into Melbourne, which is already in an undersupply issue. So while the general media looking at their whinge hinge, which is land tax, and that's why Melbourne's not moving, gear up for Melbourne. That's the place to be investing if you haven't got a strong portfolio in Melbourne.
And the sentiment thing, there's a little thing called urgency. So the market's sort of red hot. People have missed out on a property. They think I've got to buy the next one. They put a good offer in, and it starts to drive the market. We're not seeing the urgency in Melbourne yet. And the other part to that is the media is normally 6 months behind.
At least.
So once the media starts saying market's heating up, expect that there's been 6 months growth happening in the market already. So let's assume the rates are where they are, because a 0.25% or a 0.5%, it makes a difference, but not an enormous difference.
Correct.
And it impacts sentiment and probably gives a bit of relief to cost of living. But we've talked already in this episode that for each 1% drop in interest rates, 10% growth in house prices.
Yeah.
So if we're talking predictions for 2025 and rates start to come down, I don't think we need to be Nostradamus to start to think there'll be rate growth in the market next year. Price growth in the market next year.
Price growth in the market next year. There's absolutely guaranteed price growth. I don't like to do short-term price predictions, but if I was blowing the trumpet on or ringing the bell and saying it's time to go, then right now is the time to invest, especially Melbourne's strong, Brisbane is hot, and Perth has still got some specific areas that are really good to invest in.
So a prediction is that somebody who's sitting around today thinking I'll buy early in 2025 but doesn't, this time next year is sitting there thinking I've missed out on some growth in my property.
Yeah, absolutely. So Christmas is a really good time, and holidays are a really good time, we find, for reflection. If people are making New Year's resolutions, get your gear together before Christmas. Don't think you're going to do it during Christmas, but start to absorb information, get geared up. People usually come back strong in January and start investing heavily because everyone sits around and says, I've wasted a whole another year and I should have invested a year ago. So you get a large amount of people who gear up in the new year and usually see some good price growth then.
So Cam, we've had a couple of listener questions, and I love this section of the episode every month because it's really some insight into what people are thinking out there.
Yep.
One of them, and it's probably a regular one, but probably really relevant now, being that time everyone's reflecting on what they're going to do this year or didn't do in 2024. What advice would you give to investors who are considering entering the market?
I'd get them to reflect back. This is always a good one. People always talk about hindsight. I wish I had hindsight. It frustrates me. People say, oh, well, with hindsight, I would have done this or that. The reality is there's going to be so many people over Christmas that start thinking about investing because they're out of their 9 to 5. They're starting to think about themselves. They get geared up and think, this is the year I'm going to do something. Then they get back to their 9 to 5 and they do fuck all. And so ask yourself, did I do anything last year? Did I do anything the year before that got me ahead financially? Have I made any dramatic steps to improve my and my family's future financially? And if the answer is no, then you need to pull your finger out and actually do something. Harsh enough? Sorry, listeners, but I've always been one that takes action and thinks later, sometimes to my detriment. But when it comes to investing, I take calculated, measured steps to push myself forward. I don't think there's a day or a week that goes by that I don't think, how do I improve my financial outcome?
I heard this morning a client was shown a property in March by us.
Yeah.
Didn't proceed. property got revalued $95,000 ahead of what they said no to this week.
Yeah.
You need to take action
Yeah.
to get a result that benefits your future self.
Yeah. And while it's one client who obviously missed out on it for, obviously confidence reasons at that point in time, and that was interest rates. I know that. The clients that did take advantage of it and now got $95,000 towards the next deposit, and they can go again. So that $95,000 that client missed out on, and you feel bad, but it's life lessons. We've missed out on different investment opportunities in time with not acting when we should have. But people need to understand and start to question themselves and say, what does that $95,000 that they missed out on, what could they have done with it? Now, is it the deposit for your next investment property? Does it get your kids into the market? If you've got a property portfolio already set up, is that the holiday that you have that brings your family together and gives a memory that's going to last a lifetime? So what does that mean in what you can do with it?
It's really easy to get caught up in it's just a number.
Just zeros on a page.
Just some zeros, but yeah, as you said, let's look at it and go, it's a free Mercedes, or it's a free European holiday, or make it something tangible in your mind.
Yeah.
It's a shitload of money.
Yeah, that's right. You don't have to buy a Mercedes, but you could. I'd go the European holiday, but I know you go the Mercedes. What are your final thoughts on 25, and what does it hold for property investors?
My view on the market, and people will say we've got rose-coloured glasses and always think it's going to go up, but I look at all the metrics in the market. I look at shortage of housing. I look at rental vacancy rates. I look at the time on the market in the different capital cities, and particularly in Victoria, I look at we shouldn't be the 6th most expensive median in the city. We shouldn't be country. We shouldn't be sitting just ahead of Hobart and Darwin.
No.
We've got the second largest population, growing the fastest. We've got a massive housing shortage.
Strong business economy.
Strong business economy. Melbourne should be in a boom. If you took all those stats ordinarily, you'd say Melbourne is booming. We're not, but it's a matter of time. Thanks for today, Cam.
Thank you very
Always
much.
a pleasure. You enjoy your Christmas break. And for any listeners or anyone out there, hello@opencorp.com.au. Thanks for tuning in.